Hi and welcome to the weekly roundup for the week ending Friday the 10th of September. As always, we hope you're enjoying these weekly reports, so please don't forget to subscribe to receive our regular reports and stock market content. And of course, any questions, please pop them in the comments section below. We'd love to hear from you. And finally, we invite you to follow our free stock market reports on tech stocks, banking stocks, and IPOs using the link in the descriptions below. Well, we saw stocks falling on both sides of the Atlantic this week amid growing concerns over the impact that the spread of the Delta variant is having on the economic recovery and global supply chains. Disruptions in supply chains are depressing growth whilst raising inflation, meaning that central banks have reduced ability to continue supporting the economic recovery. The BOC and the ECB both moved to taper bond purchases this week, fueling concerns of central banks reining in that support as growth starts to slow. Concerns over the health of the US labour market lingered across the week after last Friday's non-farm payrolls. Now, the labour market report revealed that just 253,000 new jobs were added in August, and that's well down from the 750,000 forecast. The soft data unnerved the market, sending stocks lower. The FTSE dropped 1.6% this week, whilst the DAX dropped 1%. Over in the US, the Dow Jones underperformed its peers as investors sold out of cyclical stocks, which are most closely tied to the health of the economy, whilst rotating into big tech. The Dow Jones dropped 1.3% so far this week, the S&P 500 has declined 0.8% and the Nasdaq 0.6% down. On the exchanges, the US dollar is set to gain around 0.5% this week. The greenback shrugged off the weaker US non-farm payroll report and rose on the back of hawkish Fed comments. The euro is in line to close the week lower versus the dollar, despite the ECB tapering those bond purchases ever so slightly. However, the central bank also said that the programme could continue beyond March. Now, the announcement came whilst inflation in the bloc is at a decade high. The pound dropped at the start of the week, hitting a 2-week low on the back of concerns over Boris Johnson's tax hike plans. However, it did bounce back towards the end of the week, putting it on track for a flat finish after BOE Governor Andrew Bailey said that he was amongst those who thought that the minimum conditions had been met to consider a rate hike. So in the commodities market, oil traded in a tight range this week and is set to end the week at approximately the same level that it started the week. Investors have been weighing up demand concerns amid rising Delta COVID cases against a slow return of oil output in the US Gulf of Mexico following that Hurricane Ida. Now, 77% of production in the Gulf is still offline. Gold is set to decline over 1.7% this week, snapping that 4-week winning run on the back of a rising US dollar and central banks tightening monetary policy. Questions over when the Fed could move to tighten policy still remain, however. In the stock markets, here in the UK, EasyJet, the budget airline, crashed over 10% this week as it rejected a takeover approach and announced plans to raise £1.2 billion from shareholders in a rights issue in order to bolster its finances. Now, this could help it withstand a more prolonged downturn in the travel industry, but it did clearly unnerve those investors. Also in the UK, Dunelm has surged 15% across the week after online sales surged, and as it dishes out the dividends. The home furnishing retailer announced a 44.6% surge in profits to £157.8 million after sales jumped 26.3%, and that took the sales figures up to £1.33 billion. Now, Dunelm rewarded its shareholders with a 23 pence final dividend and a 65 pence special payout. Over in the US, Lululemon Athletica has jumped 9%, hitting an all-time high after a stellar earnings report, which blew past expectations. Sales surged 61% in Q2 compared to last year, a favourable comparison owing of course to the pandemic. Sales were still up 28% over 2 years. The company is on track to exceed revenue targets for 2023 by the end of this year. So that's it for the week. As always, thanks very much for watching. Please don't forget to subscribe, and if you have any questions, just pop them in the comments section below. We'd love to hear from you. And in the meantime, from all of us here at Atlantic Capital Markets, have a great weekend.